Hey guys, hello everyone, welcome back to Echo FX. All right, this video is going to be a very important and it's very special one because I'm going to be sharing some important concepts and some important idea about the global market, about trading. All right, so you may want to wait to the end of this video. All right, so before we go into the video, I wanted to just take a very important scenario. Now, imagine a scenario whereby you start having probably body ache and maybe a slight headache, and you start having body pain. What does that tell you? I mean, it begins to tell you, oh, I could have malaria, and you want to treat yourself, or you want to take anti-malaria medications, or you want to, try to rest a little bit. But it gives you a perception of, oh, I may have malaria, all right, or a scenario whereby you start having maybe your tummy start making noise and probably you get slightly annoyed. But I can tell you that you're hungry. I mean, I don't get hungry when I'm annoyed, but I mean, some people do, but you get the point. All right, so those concepts, those ideas, you can actually apply it into trading, or you can apply it into your trading activities, and it helps you to increase or helps you to understand what is happening to the market before you make trading decisions. You understand, all right? So if you're a newbie, or you're just new to the global market, or you're an intermediate trader, or you're an advanced trader, and probably you've been struggling, or you've not been seeing that consistency that you want, well, this video is for you. And you want to wait to the end of this video to get the idea that I'm going to share today. All right, so before we go, stay back. All right, if you're yet to subscribe, come on, click on the subscribe button. If you're yet to like the video, like this particular video, because it's going to be an amazing one, and share with your friends, share with everyone. All right, and put something amazing in the comment section. All right, so let's go straight into the video. All right, have you ever heard of Confluence? There's something called Confluence in trading. All right, Confluence in trading is a very, very important concept that actually increases the probability of your trading and helps you to make accurate and great trading decisions. All right, are you ready? All right, so let's go. All right, so I call it the power of three, or there's something I call the power of three. But before we go into that, let's just have a brief understanding of what Confluence is. All right, so confluence in trading actually refers to the alignment of multiple indicators or analysis tools to get stronger signals for decision making. All right, do you understand what I mean? So it means basically you're bringing one or two or three or four things together, all right, to give you a stronger signal to actually make trading decisions. All right, it also means that you're combining various technical indicators, chart patterns, and support and resistance levels. All right, it helps to filter out low probability setup and focus on higher probability outcomes. So this is the end goal of understanding Confluence. All right, to help you filter out low probability setup so that you can focus on the higher ones. All right, so for this particular strategy video, I'm going to be focusing on the power of three. I'm going to take three basic concepts, all right, for basically newbies, all right, so people that have just maybe just starting their journey in the global market, and they don't know or the things to look out for in the market. Well, I'm going to help you for this particular video. But if you're an advanced or an intermediate trader, well, you can just pick three basic things that you look out for in the market. You'll get the concept once we go deeper into the video. So you want to hold on, you want to stay back. All right, so for this particular video, like I said, we'll be talking about the power of three. All right, the power of three basically that we'll be talking about is, first of all, market structure. All right, so market structure can be, or we can look at it from the perspective of what is the trend of the market. So by now you should know what or how to identify a trend in the market. So that's actually market structure. We'll look at it again once we go into the charts. All right, so the second thing is a key level. All right, so key level could be support or resistance, or moving average, or maybe a fib level, or probably um an order block, whatever it could be. All right, so but for this video, we're looking at support or resistance. Then the last thing we're looking at for is confirmation. All right, so confirmation basically just means it could be a candlestick pattern or a chart pattern. All right, so for this video, this is what we're looking at. These are the three things we'll be looking out for. All right, so let's go straight into the charts, guys. All right, so this is the chart of USD CAD. All right, this is the chart of USD CAD. So from the idea of the power of three, which gives us the idea of the confluence, the first thing you need to do when you come to your chart, whatever time frame you're using on, remember when you are trading, all right, when you're trading, you must understand the kind of trader you are. Are you a long-term trader? Are you an intraday trader? Are you a scalper? Are you a daily trader? All right. So once you understand the kind of trader, it gives you the idea of the kind of time frame you should be trading with. You get that, all right? So, but right now, I'm going to just give us the concept, then we can proceed with the kind of. So, there's this concept that I learned from a mentor of mine that okay, if you are maybe you trade on the 1 hour time frame, all right? If you trade on the 1 hour time frame, to get the time frame you want to use for your analysis, you need to go 2 time frames ahead. So, in this instance, this is a 1 hour time frame for USD CAD. Let's say I execute my trade on the 1 hour time frame. If I want to choose the time frame that I use for my analysis, I need to go 2 time frames ahead. All right. The 2 time frames ahead in this scenario is my 4 hours and also my daily time frame. Right. So if I execute my trade on the 4 hour time frame or the 1 hour time frame, I want to analyze on the 4 hours and also on the daily time frame. Let's say I execute my trade on the 15-minute time frame. For instance, I execute my trade on the 15-minute time frame. What time frame do I use for analysis? The 30-minute or the 1 hour time frame? Hope you understand the concept right now. All right. So let's go straight into what we have for today. All right. So we are on the 1 hour time frame. Like I said, if I want to analyze, I want to go to the 4 hours or the daily time frame. So I'm on the daily time frame. So from the idea of confluence, all right, the power of three, like we rightly saw, all right, the first thing is to identify what the trend or the structure of the market is. All right, so clearly you can see that at this point, the market or the structure of the market is to the upside. It is obviously to the upside. All right, you can clearly see that the structure of the market is what? To the upside. So what you want to look out for, you possibly want to look out for some good buying opportunities. All right. But since you've identified, it is not enough. All right. It is not enough for you to blindly just go into a buy anywhere in the market. You need to also bring some other things to help you identify a high probability level or zone in the market that you can buy from, that will still give you the idea that okay, this market is pulling to the upside. So the trend of this particular market is what? To the upside. So the next thing is to do is to identify your key level on the market. All right. So from this chart, let's identify our key levels. So I can see this key level down here that the market has been respecting over a long period of time. All right. You can clearly see this zone over here. So this is an important zone over here. You can see our market used it to sell, broke above it, and has been sitting above it for a while. All right. So after that level, this is the next level I can see up here. All right. The next level I can see up here. So you can see how the market respected level one here, twice, 3 times, then broke above it, then broke back into it. All right. So what I'm anticipating right now is, remember, the market structure tells me that the market is to the upside. And when it's to the upside, what do you want to look out for? Buying opportunities. Buying opportunities. But I'll also check something very important, that there's a level here that the market is respecting presently. All right, you can see how long the sell went at this level. All right, and price rejected massively from that zone again. All right, so I want to be very, very careful for this particular trade. So the first thing I've identified is the trend, which is the upside. Then I've identified my zone, which is where I want to buy from. All right, so the last thing you're looking out for is confirmation. All right, confirmations. So what is confirmation? Confirmation is actually, you're looking for a candlestick pattern, which could be, what candlestick pattern is? It could actually be a pin bar. All right, let me just quickly show us some few candlestick patterns. All right, so this is an example over here, like a bearish engulfing at an important level. So this is a bearish engulfing. All right, so this is a bullish engulfing. All right, this double, this red one and the green one, as actually bullish engulfing. So this, let's look for this, another bullish engulfing over here. All right, this is a pin bar, this candle over here, this single one. All right, so pin bar is a single candlestick pattern. A bullish engulfing or a bearish engulfing, they are a double candlestick pattern. All right, so you can actually just check it on Google what candlestick patterns are. So those are the next thing you're looking out for. So it could be a candlestick pattern or a chart pattern. A chart pattern actually varies. It could be a double top, head and shoulder, triple top, triple bottom, ascending triangle, descending triangle, whatever. All right, so you can also check that on the Google. All right, so the first thing, like I said, in respect to this video, you want to pick out your trend. All right, you want to pick out, remember the trend now on the daily time frame. Remember, you're not a daily time frame trader. You're just using your daily time frame to analyze, to give you an idea of what you should do. All right, looking at the power of 3. All right, so once you've identified that particular trend, you identify your key level, then you can scale down to the time frame you are trading on, which is what, a 1 hour time frame. That is where you are looking for your confirmation to buy. You understand? That's where you're looking for your confirmation to buy. So you need to be absolutely patient for the market to come into the zone or the key level you're looking out for. So the two levels I'm looking to buy from this particular time frame is either this level over here or this one down here. Now you may be looking, you may be thinking, how will I buy from here? Easily, you may want to wait for the market to trade above that level again, possibly come back to retest, then give you a bullish candlestick pattern, then you can buy from there back to the upside. Back to the upside. Yes, easy as that. Now let me give you a particular scenario. Imagine a scenario whereby you saw the market when it was down here. All right, imagine a scenario where you saw the market was down here. Overall, the market was still to the upside. Now, if you draw out your key level, you would definitely and evidently see that the market always respects, or most times respects, this level. So imagine you saw the market or price at this point. It would have been very easy for you to have taken a buy from here. In fact, on the 1 hour time frame, you can see a bullish engulfing candlestick. Are you with me? All right, so you can see a bullish candlestick. Imagine you took a trade from here. All right, you took a trade from here and you're maybe a stop loss below this level. You'll be able to take a huge chunk of the move to the upside. So that's one of the importance of having the power of understanding confluence. All right, at least 3 confluences in your trading. All right, I'll take it again, at least 3 confluences in your trading. So the first one could be the trend or the market structure. The other one could be, right, trend, which is the market structure. The other one could be the key level. All right, the key level you're looking out for, either support or resistance. All right, so if the trend of the market or the market structure is bullish, what do you want to look out for? Buying opportunities. And where do you buy from? From support or resistance, from support rather, or demand. All right, so you plot out your support and you wait for price to come into that support. In this scenario, is either I wait for price to come here, down here, then I wait for my candlestick pattern, then I can buy. Probably I'll buy to the upside, or I wait for price to break above. In case price doesn't come down here, I wait for price to break above, then come back to retest, give me a bullish candlestick pattern, then I can buy from there back to the upside. That is all. That is all. And you can apply this on any time frame. If you're trading from a 15 minutes time frame, you would need to use a 1 hour time frame to understand what the trend of the market is, then scale down to 15 minutes for execution or for your confirmation before you go into your trade. Now let's look at another example. GBPUSD. This is GBPUSD 1 hour time frame. For instance, let's say I want to execute on my execution time frame is the 15 minutes. Now, what do I do? Remember what I said? Go 2 time frames ahead to analyze. So 2 time frames ahead is 30 minutes and 1 hour. So I'll go to the 1 hour time frame. What's the trend of the market? Now, evidently, on the 1 hour time frame, the trend of the market is to the downside. You can clearly see that this trend of the market is to the downside. Clearly, all right. So after you've done that, the market structure is bearish. What do you want to do? You want to sell from a resistance. Now, what's the obvious resistance I can see here? Let's pick it out. So this is the first one I can see over here. I can see this resistance here. All right. I can also see another key level down here. All right. I can see another key level down here. Even where price currently is a key level, because price is actually finding it difficult to break above that level. But just to be safe, let's pick out this one. Let's pick this one out, and let's also pick this one. We would, yeah, pick this one out small. All right. So now, since I know the market is to the downside, now in this kind of situation, this I would prefer that the market breaks above or breaks down to this level, breaks below this level. Yeah. All right, I'll wait for the market to break below this level, because this level may not hold. The market may want to trade all the way back to the upside or before it falls. But for the fact that the market is still below this trend line, I would be much more confident to trade when the market breaks below this level. Now, since I've analyzed this, I can delete this particular one. Sorry about that. So after I've analyzed on my time frame, I can scale down to my 15 minutes, which is my my confirmation time frame or my execution time frame. You can see it's looking much easier, it's looking much clearer. All right. So all I need to do is what? For the market to trade all the way down here, break below, then possibly come back here to retest, then give me a bearish candlestick pattern around this level, then I can do what? I can sell somewhere down to this point here. Yes, I can sell somewhere down there. I'm not looking for too much. All right. So that is an idea, or that's how you increase the probability of your trade. Yeah, that's how you increase the probability, or you actually pick out high probability trade, because the trend is telling you one thing. The 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 the, the key level you're trading from, which is from the support or resistance, is still giving you another vibe, or is telling you another thing, is telling you the same thing. And if you see a bearish candle in an instance whereby the trend or the market structure is to the downside, and price is currently at or trading at a resistance, and you're seeing a bearish candle close from a resistance, so those are three things telling you the same thing, which is what? To sell. It's actually to sell. Now, before we actually call it, or before we end this particular video, now let's look at one more instrument. Let's look at NZD/USD. All right, so let's clear this. Let's stay plain chart. Now, the same idea. Let's say an instant, my execution time frame is the 1 minute time frame. All right, it's the 1 minute time frame. I don't like trading from the 1 minute. It's too many noise. All right, but let's say our execution time frame is the 1 minute time frame. So what do? You go 2 time frames ahead, which at this case is the 15 minute time frame. And on the 15 minute time frame, what can you see? What is the trend of the market? Clearly, you will see that the trend of the market is to the downside, right? It's to the downside. Now, once you've identified the trend, the next thing is to identify your key levels, the most important levels close to where the market is currently trading. So the first level I can see is this one here. So market used this level to buy, broke below it, but it has not retested it yet. All right. So the other level I can see is the level down here. So I'll most prefer to sell into this level, since I know the market is bearish. So all I want to see is the market to trade all the way back here. All right. So this is even for Confluence. All right. This is for Confluence. What I mean by for Confluence is the market structure is bearish. All right. If price comes to my resistance or come to my key level and give me a bearish candlestick plus this particular trend line, all right, this particular trend line, a bearish trend line. So this is four confluences telling me the same thing, telling me one thing, which is to sell. So all I need to do is to wait for market to come to this point, give me a bearish candlestick, and I sell back to the downside. All right. So the idea behind the Confluence is to be patient. If you decide to take trades or rush into the market, you are putting your money on the line. All right. So you need to be patient for the high probability setups. All right. So you can make good money from the market. All right. So I hope this video actually impacted you and you're able to get a lot of value from the video. And if you did, come on, put a like in the put a like, click on the like button, subscribe to the channel so you get more amazing concepts and videos like this, and also share with your friends. All right, share with your families or share with fellow traders so they also learn this particular concept and this particular idea and apply it into their trading. All right, so thank you guys. Bye for now. Trade safe, and most importantly, wait for the high probability setups. All right, bye guys.